What is peer-to-peer lending platform? Am I going to get a fixed returns for a fixed tenor? And is it really risk worthy? And am I going to get a returns without any default? And what is the regulations available in this platform model? And all these are the things which you are going to discuss in this video. And hi, hello, this is Ganesan Thiru, your financial expert. I help you in choosing the right investment choice so that you are going to make huge returns out of your investment, understanding the risk factor also. So let's get into the today's topic. What is peer-to-peer lending platform? Just think of we have been using peer-to-peer lending for a very long time. And say, for example, your friend is in need of say 50,000, and you'll be lending your amount without any interest, or he may return to you after 3 years or 4 years, or he may never return at all. And there has been cases. And from that time, you will stop lending the money to any of your friends or any of your relatives, so that because you are very sick of people who cheat you with money, right? So everyone would have experienced some form of weather, maybe few thousands to few lakhs, and some would have lost it, some would have gained a bit, some would have got interest alone. All these stories would have happened. What if it has been brought professional things into it, and that is what peer-to-peer lending is all about. There is a lender, there is a borrower, and each investor will be mapped with many lenders, many borrowers. Sorry, each investor will be mapped with many borrowers. Meaning, your 1 lakh investment will be mapped with more than 10 to 20 borrowers, so that your risk is diversified, so that you will recover your money quickly, and more than your return, you will get your money back along with the fixed returns. This is the model of peer-to-peer lending. And from 2013 till 2018, there was not much regulation, and many companies were operating in it. And once the regulation set in, many more companies joined this bandwagon. And Faircent was the first company who started operating in India in this model. And slowly, India P2P, Lendbox, there are n number of companies, Liquid Loan, all these companies joined, and they were able to attract customers based on their focus. Maybe they wanted to target the hospitals where there are huge operation costs involved, and they'll be able to provide loans to them. And there are n number of models, n number of things. And again, where is these all these things are how these things work out. Say I need money for 50,000 or 1 lakh or 2 lakh, I can ask my friends, and after some time I can't even ask them, so I will go to this kind of companies, because banks will operate and disburse money only by from 5 lakhs or 10 lakhs, and that's a huge thing, right? So I just need 1 lakh money for next 6 months. I can return it back, and I'm okay to repay it with a fixed interest also. That is how this P2P platform started operating, and now you can understand. This is a known model, and it's almost like that. That is what banks are doing, but they are doing at a bigger level. At a smaller level, we have so many lending platforms. Consolidation will happen over a period of time. Right now, there are many companies which is operating, and earlier, the NPAs, the individual investors needs to track the borrowers, and if there is an NPA by the borrower, the investor needs to raise a request, follow up with the cases and everything, and he needs to try to recover, and it may take 2 years or 3 years. I had a friend who was trying to work out with the borrower and trying to recover for the last 3 to 4 years, and till now, the investment and the borrower returns were almost on par or negative. So that is the case. But right now, in the last couple of years, the model has been changed. The investors' money will come into pool account, and the borrowers the money will be given to many other borrowers. And but the point is, investor can see the list of borrowers, and borrowers can't see that. Only the investors can see the borrowers, and they can understand the risk profile, meaning the CIBIL score and all these data, and then they can decide how much they can lend. Earlier, that was there. Now, money will come into pool account, and the company will provide the disbursement, and the fixed interest will be given back to the investor as said. So that is, but there is no promise, because that is what RBI regulation is all about, and the visibility of borrowers list to the investors is also as per RBI regulation. So now you are clear that it is RBI regulated, and it is governed by RBI, and right now any investment model needs to be approved by RBI or SEBI. In this case, RBI is approved because it is considered as non-banking financial company, and they can lend, borrow, and they can operate in this kind of model. So without any worry, you can start investing in this kind of model. So what Faircent is doing? Faircent is something like the first company which started operating in this model, as I said, and now they have evolved. The pool account, investors' money will come in, They'll get interest for 3 months, 6 months, 9 months, 12 months, whatever period, and you're going to get a fixed returns out of it. That is what Faircent is all about. And you can park your money for 1 year or 1 month or 1 day, and you'll get interest for that also. That is called as freedom plan. It's a wise choice which you can do. You can use it as an emergency fund. You can invest up to 10 lakhs in this. All the models will accept. I mean, all the companies will accept up to 10 lakhs without any proofs, income proofs. If you want to invest more up to 50 lakhs, you need to get a CA's, your auditor's authorization letter saying that this person can invest more and he has a net worth certificate saying that your net worth is more and you can invest more in this model. So the risk is also minimized by the RBA by with this kind of platforms. And all these companies are promising, more than promising, saying that don't invest all of your money, invest only part of your money, see how it is performing for onboarding the investors. Borrowers, there are many borrowers who are in need of money. They approach these kind of platforms. They are ready to pay because they can give back the money within 3 months, 6 months, or whatever time period they are selecting. So that is what it is all about. And when it comes to risk and returns, as I said, risk was there, and now also risk is there, but it has been minimized. And right now, the investors at the maximum are going to get between 8.25 to 12%. So it will be close to 10 to 11% we can take it. And the borrowers are going to pay at least 6 to 8, 16 to 18%. So there is a cushion period between the investor returns and the borrower's money. Sorry, the borrower's return and the investor's return. So which is close to 5 to 6%. With this kind of gap, they are able to manage the operation and they are able to operate this model and they are able to give returns to the investor as well. So the point is risk is there, but this is how the banks also operate, and it is governed by RBI, and they know the capital, and all these data can be viewed by the investor at any point of time, and park you part of your money as an alternative investment and gain good returns instead of parking your money in fixed deposits or current account. So again, a disclaimer: this is a I'm a distributor of Faircent, and if you are interested, just analyze more about Faircent and then look at investing in this kind of platform. And this is not a recommendation at all. So, because you need to analyze yourself before investing, I'm here to provide you with a choice of investment which can give you good returns, providing the risk factors and other things as well. Any questions, please do reach out to me. Check the link in description and see you in the next video. Thank you so much.